You know that feeling? Your heart just drops, a brown envelope hits the doormat, and you see that HMRC logo. You open it up and confusion. It says you owe tax, maybe hundreds of pounds. But for the life of you, you can't figure out why. It's a feeling that's way too common.
So, if that's you, first things first, take a deep breath. Don't panic, you are absolutely not the only one. Seriously, millions of people across the UK get these letters every single year, and it almost always comes as a complete shock. But figuring out why it's happening is the first step to getting it all sorted.
And to help make sense of it all, this entire breakdown was arranged and developed by the tax experts over at Pro Tax Accountant. They've helped us put this together to walk you through exactly what's going on, cutting through all the confusing jargon to give you the clear answers you actually need.
Okay, let's dive in. Here's what we're going to cover. We'll break down why you might have gotten that bill, get to the bottom of what benefits in kind even are, and most importantly, lay out exactly what you can do about it step by step. We'll also take a little peek into the future at a huge change coming in 2027 that's going to affect pretty much everyone.
Right, so let's start with that sinking feeling. You've got a letter, probably a P800 tax calculation, telling you you've underpaid tax from last year. And the big question is, how on earth did this happen?
Well, first off, it's crucial to get this. An underpayment is almost never about you trying to avoid tax. It's usually just an admin error or a simple hiccup in the system. Maybe your tax code was wrong after you changed jobs, or perhaps you've got a second job and the tax wasn't calculated properly across both. Or, and this is a really big one, your employer might have made a mistake with your payroll. Whatever the reason, the end result is the same. HMRC thinks you owe them money.
Now, one of the most common and definitely most confusing reasons for these unexpected bills is something called benefits in kind. You probably think of them as nice little free perks from your job. Well, HMRC sees them very, very differently. To them, it's hidden income.
So what on earth is a benefit in kind, or a BIK as you'll often hear it called? Put simply, it's any non-cash perk you get from your job that has a real-world monetary value. Think about it like this. If your boss gave you an extra £1,000 in cash, you'd absolutely expect to pay tax on it, right? A benefit in kind is treated in exactly the same way. It's considered part of your total earnings, even though you never actually see the money. And you would be amazed at how many everyday perks are actually taxable. That private medical insurance your company offers? Yep, taxable. The company car you use at the weekends? That's taxable too. Even things like a free gym membership or those lunch vouchers, they all count. Your employer is giving you something of value, and you better believe HMRC wants its slice of the pie.
Now let's look at the next step. How does a supposedly free gym membership morph into a tax bill that lands on your doormat a year down the line? This is the crucial bit. This is us following the money.
It's basically a four-step journey. First, you get the benefit, like health insurance. Easy. Then, after the tax year ends, your employer has to tell HMRC what that benefit was worth in cash terms on a special form called a P11D. Now here's the part that causes all the confusion. HMRC then adjusts your tax code for the next tax year. They shrink your tax-free allowance to account for last year's perk. This means you end up paying more tax out of your salary to cover the bill. That delay is exactly why it feels so sudden and unexpected.
And this is the part that catches so many people out. Even though it's your employer who gives you the perk and reports it, the legal responsibility for paying the tax, well, that falls squarely on you, the employee. That's why the bill has your name on it, not theirs. In the eyes of the law, it's your income, so it's your tax to pay.
Now, if the benefits you get are pretty valuable, you might see a K at the start of your tax code. If you do, think of it as the normal system in reverse. Instead of giving you a tax-free allowance, a K code actually tells your employer to add a certain amount to your taxable income every month. It's just HMRC's tool to make sure you're paying the right tax on those big perks directly from your salary.
But that's not all. Here's where most people go wrong. The rules around these benefits can be incredibly specific, with some really sharp edges that are easy to get caught on. Let's look at a classic example that trips people up year after year.
Let's talk about the annual staff party. HMRC actually lets your employer spend up to £150 per person on an annual event, like a Christmas do, completely tax-free. It sounds like a nice, simple rule, right? Well, not quite.
And this is just a brilliant illustration of the danger. Check this out. If the party costs £149 per head, fantastic. Zero tax is due for anyone. But if the cost just tips over to £151, just £2 more, the entire exemption vanishes. It's not just the extra £2 that gets taxed. The entire £151 becomes a taxable benefit for every single employee who went. A tiny overspend can cause a massive, unexpected tax headache for everyone.
So what can you actually do if you've got one of these letters? Or if you're now a bit worried your tax code is just plain wrong? Whatever you do, don't just bury your head in the sand. Stay with me. These next points are your immediate practical steps to take back control.
First things first, do a bit of your own detective work. The HMRC app is genuinely useful and lets you see your current tax code in seconds. Does that code match the one on your latest payslip? Dig out your P60 from the end of last year, that's your annual summary, and just take a look through your payslips. Are there any deductions or benefits listed that you don't recognize? Get your facts straight first.
If something just doesn't look right, it's time to act. Give HMRC a call. Be polite, but be firm, and make sure you write down who you spoke to and when. Now, here's a crucial question to ask them. Could your employer be at fault? Maybe they used the wrong tax code. If it was your employer's mistake, you can ask HMRC to issue a direction for them to pay the tax. And always remember, you have a right to appeal, but you only have 30 days, so don't wait around.
And here's a little pro tip just to show you why checking is so important. One person had switched from a company car to a cash allowance, but their tax code was never updated. For 5 years straight, they were paying tax on a car they didn't even have. After checking, they got a rebate of nearly £5,000. It absolutely 100% pays to check.
Okay, let's look ahead for a minute, because this whole system of P11D forms and delayed tax codes we've been talking about, well, it's about to be completely overhauled. A really big change is on its way. From April 2027, something called payrolling benefits will become mandatory for all employers. So, instead of reporting benefits once a year on a P1D, they'll process the tax on them through the payroll every single month, in real time. This is great news because it means no more delayed tax code changes and hopefully fewer surprise bills. But a quick word of warning, that first year could feel a bit tight on the cash flow, because you might be paying tax on the current year's benefits in real time while also still paying off last year's tax through your old code. It's a temporary overlap, but it's one you need to be ready for. I know, it's a lot to take in. Tax codes, P11Ds, K codes, and a brand new system just around the corner. It is completely understandable to feel confused or worried about whether you're paying the right amount. These rules are complex, but the good news is you don't have to try and figure it all out by yourself.
So the crucial point is, if you've got a letter from HMRC, if you're worried about your tax code, or if you just want some peace of mind that everything's in order, the best thing you can do is speak to an expert. The team at Pro Tax Accountant can look at your situation, deal with HMRC for you, and make sure it's all correct. All their contact details are right here.
And finally, just a quick reminder that the information in this guide is for general purposes only and shouldn't be relied on to make financial decisions. Before you take any action, you must consult a professional like the team at Pro Tax Accountant. For more clear, simple guides just like this one, make sure you subscribe. A simple check of your tax code today could save you thousands tomorrow. Isn't it time you took a proper look?